It's Sunday night. You're asleep, the house is quiet, the heater clicks, the fridge hums, and somewhere inside a glass tower, a computer flips a switch. Not on your TV, not on your phone, on your margin. And when you wake up, your silver position is gone, liquidated. Not because you were wrong, not because silver failed, but because the casino changed the rules while you were in the bathroom. That's what a CME margin hike is. A trapdoor, a silent trapdoor. It doesn't announce itself with sirens, it just opens. And right now, that trapdoor is opening under thousands of silver traders who thought they were safe, because volatility is screaming. CME's own volatility gauge for silver, CVOL, has been flashing triple-digit readings. Recently, it showed about 101. 86? That's not normal. That's a fire alarm. That's stop-out season. And most silver traders aren't ready for what comes next, because they still believe the lie. They believe the futures market is a free market. It isn't. It's a controlled hallway, with doors that can lock from the outside. And when volatility spikes, those doors lock. The exits get smaller, the oxygen gets thin, and the people using leverage, they panic first. They always do. Here's the truth they don't say out loud on TV. When the CME raises margin, it doesn't just manage risk. It forces selling. It forces liquidation. It creates a wave. And if you're standing in front of that wave with borrowed money, you're not a trader. You're a swimmer with bricks tied to your ankles. You feel confident until the water rises, then it's too late. Now listen, this is where the sleeping herd gets hurt, because the herd thinks the rules are stable. They think the referee is fair. They think the house wants them to win. It doesn't. The house wants them to keep playing. And the moment the house feels danger, it tightens the screws. That's what margin is. A screw, a clamp, a hand around your throat. Let's talk about the mechanism, the hidden lever, the thing that turns a dip into a massacre. Margin. Not your opinion, not your conviction, not your chart. Margin. CME clearing has described shifting precious metals margins from fixed dollar amounts to a percentage of notional value. In plain English, if the price rises, the required collateral can rise automatically. The finish line moves while you run. That sounds technical. It's not. It's lethal. Because silver futures are not small. The core COMEX silver contract is 5,000 ounces. 5,000. That's not a position. That's a truckload. So if silver is, say, $80 an ounce, one contract controls 5,000 times 80. That's $400,000 worth of silver. 400,000. And here comes the trick. CME's advisory shows initial performance bond levels around $30,500 for standard accounts and around $35,750 for higher risk accounts, alongside percentage figures around 9% and 9%. Do you understand what that means? It means you can control about $400,000 of silver, with roughly $32,500 down. That's leverage, that's a loan, that's a mortgage on a moving target, and when volatility surges, that down payment can jump overnight. No vote, no debate. And this is where people get slaughtered, because margin is not a suggestion. Margin is a demand letter. Pay by close, or else. So let's do the math like grown-ups. Say you put up $30,500, silver drops 8%. 8%, that's Tuesday. An 8% move on 400,000 is 32,000. Your entire margin is basically wiped. And then the broker calls. Not tomorrow, now. And if you don't wire more money fast enough, they don't ask your opinion. They don't care about your long-term thesis. They sell you out. At the worst possible moment, at the bottom. Into the panic. This isn't a theory, this is math. And here's the dirty part. They love weekends. Because weekends are when your guard is down. Markets can reopen and gap. Prices can jump like a startled deer. And if margin requirements rise while you're sleeping, you don't get a fair fight. You get a surprise. You wake up to an email, a notification, a cold sentence, additional funds required. And you have hours, not days, hours. That's why I keep saying stop-out season isn't about being right. It's about surviving the mechanics. Now imagine this. You're at breakfast, coffee in your hand, grandkids texting. You glance at your account, and your position is smaller, not because you sold, because they sold it for you. Then you scroll the news. Volatility event. Risk management. That's the polite language they use for taking your seat at the table. And once they take it, they don't give it back. You have to buy in again, at a worse price, with less confidence, with more fear. That's how people get broken, not in one big loss. In a series of small humiliations that drain their courage. Now I want to make counterparty risk so clear a 65-year-old can feel it in their bones. Paper silver means your claim sits on someone else's promise. And promises have fine print, promissory notes, terms, conditions, emergency clauses. They can change settlement rules. They can change margin rules. They can change liquidation rules. And they can do it fast because the system is built to protect itself first. Physical silver has no fine print. A coin doesn't have a customer service department. A bar doesn't have a policy update. It just is. And when you hold it, you've removed an entire layer of permission from your life. That's the point. Now here's the part that should make your stomach tighten. When volatility spikes, everyone gets squeezed at the same time. Everybody needs cash at the same time. And when everybody needs cash at the same time, cash becomes king. So what happens? They dump what they can dump. They hit market orders. They trigger stops. They smash bids. And the price drops faster than your brain can process. The so-called safety net people trust? It's paper, FDIC, government backstops, promises. But margin calls don't wait for Congress. Margin calls don't care about your retirement plan. And when markets start moving like a knife fight, liquidity dries up, spreads widen, stops slip, and your plan becomes a prayer. Silver traders keep thinking, I'll just place a stop. No. In stop-out season, your stop is the match that lights your own house. Because the system hunts stops when it's stressed. It's like sharks smelling blood. And what feeds those sharks? Volatility. Triple-digit CVOL is the market screaming, price is about to whip. And whip means one thing in leverage markets, forced liquidation. Now imagine this. You're retired. You did everything right. Worked decades, paid taxes, saved. You skipped vacations. You drove the old car longer. Not because you're cheap, because you're responsible. Maybe you're not rich. But you've got a nest egg, and you've got one big fear. Inflation, the silent thief. So you buy paper silver, an ETF, a futures position, some digital exposure. Because it's easy, because it's liquid, because your broker made it feel safe, then volatility spikes again, CME raises margin again, your broker raises margin again. And the talking heads tell you it's healthy, risk management, stability. But what it really is a moving finish line. Now your safe silver exposure requires more cash right now. But you don't keep piles of cash sitting around. You're retired. You're living on distributions, on pensions, on Social Security. So you do what the system forces normal people to do. You sell something else, stocks, bonds. Maybe you sell at a loss to meet a margin call, to keep a position you thought was protection. And then the real punch comes. The next day, silver rips higher. Because after the forced selling, the market rebounds, and the only people still holding are the biggest players, the ones with deep pockets, the ones who don't get margin called into the street. That's the trap. You get shaken out low, they buy your fear, then they ride the recovery, and you sit there staring at your empty hands, like a man who watched the lifeboat leave without him. Now zoom out. This is bigger than silver. This is the whole system. Debt, money printing, rules changing, digital control. And when the system is stressed, governments don't protect the public first. They protect the system first. Always. So what's coming? More surveillance, more control, more emergency measures, more restrictions sold as stability, CBDCs, programmable money, a future where they can flip a switch and decide what you can buy, where you can buy, when you can buy. And if you think that sounds impossible, remember this. They already taught people to accept lockdowns. They already taught people to accept rationing. They already taught people to accept temporary measures that never leave. The herd complied. The herd clapped. The herd mocked anyone who asked questions. Now, imagine this. Your bank has technical issues. Your card declines. Not because you're broke, because the system is protecting itself. You go to fill your tank. You can't. You go to the store. Your purchase doesn't go through. You call the bank. You sit on hold. You hear that looping music. You can't eat music. Your pension hits your account. And the next day, prices jump again. So the numbers in your account look the same. But your life gets smaller. That's how it happens. Not with a bang, with a slow tightening, like a belt pulled one notch at a time. And while the sleeping herd argues about politics on TV, the rule makers quietly rewrite the fine print. So what do? You stop playing their paper game, huh? Because paper has one deadly weakness, counterparty risk. That's the phrase nobody wants to say, because it exposes the illusion. Counterparty risk means this. If you don't hold it, you don't own it. If your silver is an entry on a screen, you're trusting someone else to make you whole. A broker, a clearinghouse, a bank, a government, a promise. And in stop-out season, trust is the first thing that gets vaporized. Physical gold and physical silver are different, not because they go up, not because they perform, because they don't require permission. They don't require a login. They don't require a clearing member. They don't require the CME to feel generous. They don't require the system to stay polite. Physical metal is not an investment. It's survival. It's freedom. It's a bearer asset. Whoever holds it, owns it. No middleman, no gatekeeper, no counterparty. And that's why the awakened few have always kept metal close, because they know the Titanic doesn't warn you before it hits the iceberg. It plays music, it serves dinner, and then snap. Cold water, dark corridors, locked doors, and only the people with lifeboats live to tell the story. Your metal is the lifeboat. Now let's make it plain. When CME raises margin on paper silver, it squeezes leverage. It forces the weak hands out. It creates chaos. And chaos is where paper promises fail first. But physical? Physical doesn't get margin called. Nobody can liquidate your coin because volatility spiked. Nobody can halt your bar. Nobody can hit a button and erase ounces you hold in your hand. That's why I say this, and I mean it. Be your own central bank. Not as a slogan, as a survival doctrine. Because the real danger isn't silver dropping $5. The real danger is waking up in a world where your assets are frozen, gated, rationed, or trapped behind rules you never voted for. And when people ask, why do you want physical? Here's the answer. Because I don't want to ask permission to live. Now listen carefully. I'm not telling you to gamble. I'm telling you to get out of the casino. If you're holding paper silver with leverage, understand what stop-out season means. It means the system is designed to clean you out at the worst moment. It means they'll hit you when you're asleep. And triple-digit volatility readings are the flashing red sign over the entrance. It means the floor is slippery, the lights are dim, and the house is hungry. So here's what the awakened do. They stop trusting paper protections. They build lifeboats. They reduce counterparty risk. They hold hard assets. They keep freedom close. Because in a crisis, paper promises burn. Hard metal doesn't. Paper can be diluted. Metal can't. Paper can be frozen. Metal can't. Paper can be denied. Metal can't. Now I want you to picture a simple scene. A storm hits. Power is out. ATMs are dark. Stores are open, but their systems are down. People are angry. Lines are long. Everyone is holding plastic. And none of it works. Then one person steps forward. Calm, prepared, not panicking. They have something real. Something that doesn't need a network. That's what hard assets are. Not a trade. A lifeboat. A way to stand on your own 2 feet when the crowd is on its knees. And yes, the system hates that. Because independent people are hard to control. That's why they want everything digital, trackable, programmable, revocable, so they can reward obedience and punish resistance. That's the real war, not left versus right. It's the awakened versus the machine. It's you versus them. And them is the corrupt system that prints, borrows, inflates, and then blames you for struggling. Them is the system that tells you inflation is temporary while your grocery bill doubles. Them is the system that tells you your retirement is secure while they change the rules and devalue the currency. Now let me say something that needs to be said. Silver is not just a metal, it's a signal. When confidence cracks, silver reacts. When people start looking for lifeboats, silver reacts. That's why volatility spikes. That's why margins rise. Because the system can feel the crowd moving. And when the crowd moves, the system tries to herd them back into the pen. How? By making paper exposure painful. By making leverage dangerous. By shaking out weak hands. By scaring people away from the exit. Now imagine this again. Silver jumps hard overnight. Up $3, up $5. Your gut says, finally. But your broker says, pay. Because volatility. Because margin. Because policy. So you scramble. You transfer funds. You stress. And while you're doing that, the big players are calm. They have the cash. They have the influence. They don't get squeezed. They squeeze. That's why most small traders lose in these moments. Not because they're stupid. Because they're undercapitalized in a rigged arena. That's why I'm warning you. If you're using paper leverage as protection, you're standing on thin ice. So what's the clean move? You separate speculation from survival. If you want to speculate, that's your choice. But your survival plan should not depend on a clearinghouse. Your freedom plan should not depend on a broker's email. Your retirement plan should not depend on a margin policy written by people you will never meet. Your survival plan should be in your control. Direct, simple, real, physical. Because when things break, complexity kills. And paper is complexity. Paper is layers. Paper is someone else holds it. Physical is simple. It's yours. It's there. It works. And here's the part every old soul understands. In a crisis, what matters isn't what you own on paper. It's what you can access, what you can hold, what you can move. That's why history returns to the same truth. Hard assets outlive governments. Hard assets outlive policies. Hard assets outlive panic. Because hard assets don't need trust. They are trust. Now, I'm going to bring this home. Stop-out season is not about charts. It's about psychology. It's about fear. It's about the moment your brain goes blank and you hit sell just to make the pain stop. Margin hikes are designed to create that moment. Volatility is designed to amplify it. And the system loves it because it transfers metal exposure from small hands to strong hands, from the crowd to the insiders, from the sleeping herd to the awakened few. So, if you're listening to me right now, I want you to do one thing. Don't wait for the headline. Don't wait for the crash. Don't wait for the next emergency meeting, because by then you'll be reacting, and reacting is how they win. Preparation is how you win. If you want to survive what's coming, subscribe to AG Finance Family, not for entertainment, for warning, for truth. Because the sleeping herd is about to learn this lesson the hard way. And I don't want you learning it with your life savings. One last thought. The system doesn't collapse in one day. It collapses in stages. First, they move the goalposts, then they move the exits, then they tell you it's for your safety. And by the time most people wake up, the doors are already locked. So don't be the last one on the ship. Not this time. Be the person with the lifeboat. Be the person who kept something real, while everyone else held paper and hoped. Because hope is not a strategy. Hard assets are.